Financial markets, which normally move with calculated rhythm, suddenly react with urgency. Prices begin to slide or surge. Algorithms scan the headline. Investors pause, then react. In less time than it takes to finish reading the alert, billions of dollars begin flowing through global markets. Within minutes, the number grows into trillions. It is easy to imagine markets as purely rational systems guided by numbers, data, and precise analysis. But the truth is more complex. Markets are made of people, and people carry emotion, fear, instinct, and uncertainty into every decision they make. When a breaking news alert arrives, it does not simply deliver information. It triggers reactions that ripple through the global financial system like a shockwave. How can a few words move such enormous wealth so quickly? To understand that, we need to look beneath the surface of financial markets and explore the forces that transform a simple headline into a worldwide economic event. We're starting with number 5. Number 5 is speed. The modern financial system operates at a pace that would have been unimaginable just a few decades ago. In earlier eras, information traveled slowly. Traders waited for newspapers, television broadcasts, or phone calls to learn about major events. Markets had time to digest information before reacting. Today, that delay has disappeared. The moment a breaking alert appears, it is instantly distributed through financial terminals, news feeds, and digital platforms that connect investors across continents. But the real acceleration comes from something even faster than human reaction. Algorithms. Automated trading systems monitor thousands of data sources simultaneously, scanning headlines for keywords that suggest risk or opportunity. Words like conflict, sanctions, collapse, or emergency trigger immediate responses within these systems. The moment the algorithm identifies a signal, it executes trades automatically. These machines do not hesitate. They do not debate. They react in milliseconds. By the time a human investor finishes reading the headline, automated systems may have already executed thousands of trades. The result is a market environment where the first reaction happens almost instantly, often before anyone fully understands the implications of the news itself. Number 4 is uncertainty, the most powerful catalyst for financial movement. Markets are built on expectations about the future. Investors analyze economic data, company performance, and political stability to estimate what might happen next. But breaking news disrupts those expectations. A sudden headline can introduce new risks that were not part of previous calculations. A geopolitical escalation might threaten supply chains. A political decision might reshape global trade. A financial crisis might ripple through entire economies. When uncertainty rises, investors face a difficult decision. Should they hold their positions and hope the situation stabilizes, or should they move their money somewhere safer before others do? In moments of uncertainty, caution often wins. Investors begin selling assets they perceive as risky. Others move money into safer investments, such as government bonds or gold. These movements, repeated across thousands of portfolios, create powerful waves that move through financial markets almost instantly. Number 3 is something far more human than algorithms or economics. It is fear. Financial markets are often described in terms of logic and strategy, but beneath the surface lies a deeply emotional system. Every investment decision carries the possibility of loss, and when unexpected news arrives, that possibility suddenly feels more real. Fear spreads quickly in environments where everyone is watching the same signals. When investors see prices falling rapidly, they begin wondering whether others know something they do not. The fear of being the last person to react becomes overwhelming. This is where herd behavior begins to take shape. One wave of selling triggers another. Traders watch the movement and interpret it as confirmation that danger may be approaching. As more investors join the reaction, the momentum grows stronger, pushing prices further in the same direction. In these moments, the market begins behaving less like a collection of individual decisions and more like a single organism responding to perceived threat. Number 2 is leverage, a hidden force that magnifies every reaction. Many participants in financial markets do not invest only their own capital. They borrow money to increase the size of their positions. This strategy can produce enormous gains when markets rise, but it also creates vulnerability when markets move in the opposite direction. When prices begin falling rapidly, investors using borrowed funds can face immediate pressure from lenders demanding additional collateral. If they cannot provide it, they must sell their assets quickly to cover their positions. This forced selling accelerates market movement. A decline that began as a cautious reaction to breaking news can suddenly transform into a cascade of rapid liquidations. Each wave of selling pushes prices lower, triggering more forced sales and creating a chain reaction that spreads through markets with astonishing speed. Before we reveal number 1, take a moment to think about how many times you have seen a single headline dominate global attention. If you are enjoying this exploration into how information moves financial markets, share your thoughts in the comments about a breaking news moment that shocked you the most. And if you enjoy deep storytelling about the hidden forces shaping our world, consider liking the video and subscribing to Deeper 5 so you can join us for more explorations like this. Now we arrive at number 1. Number 1 is trust. The entire global financial system rests on a fragile foundation of confidence. Investors trust that governments will maintain stability. They trust that banks will remain solvent. They trust that economic systems will continue functioning tomorrow the way they function today. Breaking news alerts challenge that trust. When a headline suggests that something fundamental might be changing, whether through conflict, economic collapse, or political upheaval, it introduces doubt into the system. And doubt can be incredibly powerful. Once investors begin questioning whether the future will look like the past, they start moving their money in search of safety. Capital flows across borders. Markets shift direction. Entire sectors rise or fall based on how that trust evolves in the hours following the headline. What makes this dynamic so fascinating is that the initial reaction often happens before anyone truly understands the full story. The alert arrives first. The reaction follows immediately. The deeper analysis comes later. And sometimes, by the time the facts become clear, the financial landscape has already changed. This is the strange reality of the modern information age. A single sentence, transmitted across global networks in an instant, can set in motion a chain reaction that moves trillions of dollars before the world has time to fully comprehend what is happening. Somewhere tonight, another journalist will press publish on another breaking alert. Screens will light up. Algorithms will react. Investors will pause, calculate, and decide. And once again, the silent power of information will ripple through the global financial system, reminding us that in a world connected by instantaneous communication, Even the smallest signal can move the largest forces on Earth.